Yeah, look, 2015 has been an interesting market. I think for markets like Sydney and Melbourne, they've continued the momentum that we saw in the second half of last year. And they've probably been the two standout markets year to date, where they've had a good broad base of demand, and we've seen decisions being made and really underpinned by some strong activity in the smaller end of the market. So the momentum has been there and it's continued. Markets like Brisbane have come off a very low base. We see Brisbane had a very tough year, particularly in 2014, and so it's probably a couple of steps behind as far as any recovery is concerned, but certainly starting to move in the right direction. Perth, it continues to be a very tough market, and we're seeing more space come onto the market, more sublease space come onto the market, and really we haven't reached the bottom at this point as far as Perth's concerned. And Adelaide and Canberra have certainly seen some good level of inquiry and more deals happening as the year continues. There's a lot been talked about around the technology sector, but there's no question that from a Sydney perspective particularly, we've seen that as being a really strong contributor to the net absorption numbers that we saw in the back end of 2014 and into 2015. Melbourne equally has had some benefit from the technology sector. But more broadly speaking, it's really about that smaller end of the market, creating the volume of activity. And the A-grade market, I think in both, and particularly in Sydney, has really been where we've seen some strong leasing done, again, in the back end of last year, and that's continued through this year to the point that A-grade market is now getting very tight. I think the smaller end is really around some new market entrants that are coming in, and we've seen that. We've certainly seen, again, some Chinese organisations, not just in the real estate sphere, but also in banking and other parts of the Chinese economy coming in and taking some good quality space. But you've seen companies getting a little bit more confidence, and not just in the technology sector, but that's certainly been an active area, and taking that next step to grow from 200 square metres to 300 square metres. Yeah, there's been a lot written about the residential conversion story. What's interesting though is we haven't really seen the impact of that flow through just yet. There's been a number of deals done, both Sydney and Melbourne, and we're seeing more appetite in Brisbane as well. We're not seeing that stock, for the most part, we haven't seen that stock actually withdrawn yet. So the positive impact that will have is really yet to flow through. Yeah, look, depending on the building, I think there's always a future for office buildings to be repositioned and refurbished rather than just go to residential use. And really peeling back what's there at the moment and looking at ways in which to present the space differently, to create potentially vertical integration within the building as well. But we've seen some great success of buildings and very traditional buildings that have delivered floors and delivered space back to the market in a very unconventional way. So not having your false ceilings, having exposed services and those sorts of things. Yeah, we're certainly optimistic. At the halfway point for 2015, we're seeing markets continue to recover, albeit at different speeds. Sydney and Melbourne, there's no question, have been the standout, and the activity that we're seeing and the movement, the downward movement that we're seeing in incentive levels, and the competitiveness that's come into certain segments of the market, right across the board, is certainly giving us cause for a positive outlook, and those markets will continue to work their way through.